So, hello everybody, here we go for another one of these Substack videos. As usual, no trade calls, no recommendations, responsible own stuff. We're here for educational purpose only. So, let's look at the Qs. So basically, QQQ's been hovering here essentially since, October, going in a little bit of a sideways range, hovering around these 608s, which is the 123 extension target of a previous measured move. And the market is slowly waiting for direction. So if you step a little bit back here, what you can see is that we had this clear move off these lows, A to B. We came back and we held the 2024 open back in the April swoon, hold 50 back, 2024 open, triple confluence also with these past 2021 highs. Beautiful little technical move. And what happened here, we've moved in extensions, hit this 123% extension, and we're kind of stalling there looking for direction. Now, why is this location interesting? Well, for a number of reasons. So first of all, a lot of wheeling and dealing inside this range, and it's really hard to read too much into it, where we've had positive excursions after we hit the 123 extension, right? Both to the upside, which continues to be defended, this high has never been breached, and to the downside, this has never been breached. Now, what are the scenarios? Well, of course, as always, you've got up, down, and third scenario, what people forget is sideways is. One, we can continue to chop here until we get a very, very clear catalyst. And at that point, it's just going to continue to be a pure range trade. There's nothing wrong with pure range trades. If without breaking down, we break higher, then we've got upside targets at the 150 extension and the 161 extension, with, again, sometimes markets correct sideways, right? So here you've got a lot of upside Momo should we get something that squeezes off with a lot of oomph to the upside, even though if you see how the market's been reacting to these topside levels, how it's been reacting post earnings, it looks like we are tired and we probably need a very significant catalyst to open up the upside. Now, to the downside, what's interesting is that the bottom end of this range, you have confluence of the 200-day moving average coming in, so that's going to be a key support. If that breaks, then your target would be fairly simple. Instead of to the upside 150 extension, 161 extension, would be an unwind all the way back down to the previous 2025 highs around 540. Confluence also with the 2025 open. Now, another thing which I'd like to highlight is that if we break down without breaking higher first, never being able to take out these highs and essentially stalling at the 123 extension, what that would mean is, I'm going to flip into a weekly chart, is that this measured move, right, that we've got from those lows into those highs, we would tend to extend this fib, right? We would extend this all the way back into these new highs. And what you can see is that the 50 back comes in with the 200 week, right? And this previous April panic low opening up much, much bigger downside. So again, upside targets 150, 161 extension. Downside target is that bottom end of the range, and the 200 DMA obviously is going to start to line up with a 50. But where it gets really interesting is should we break down with gusto below that 200-day moving average, below that range low, because everything is going to open up, a lot of potential much bigger downside targets, of course, despite the fact that 2025 open and 540 are going to be a key bull bear line going forward. Okay, so I just wanted to share some of these levels, different way of looking at things. Hope this was useful. Wishing everyone an awesome one. All the best. Talk to you guys soon. Bye-bye.